If you're a homeowner and want to pass your home to your kids, listen closely. Doing it the wrong way could cost them tens, if not hundreds of thousands in taxes. And most people have no idea they're making a mistake. They just think, I'll put the house in my child's name now. That way it's easier for them later when I'm not around. It sounds helpful, but it can create a tax nightmare for your family. Hi, I'm Rob, certified financial planner, and in this video, I'll show you what specific mistakes homeowners make and how it's costing them, why this happens, what a step up in basis is, and how to make sure you handle this correctly with the proper legal documents. When you give your children or anyone else your home while you're still living, you're not just giving them the house, you're also giving them your tax history. That includes what you originally paid for the home, and this is a huge problem. Here's what I mean. Say you bought your home for $400,000, and today it's worth $500,000. You decide to put it in your daughter's name now. When you pass away, she sells the home for $500,000. Sounds simple, right? But now she owes taxes on the profit from the sale, on the $100,000. Because you gave her the home while you were still living, the IRS taxes your daughter on the difference between what you paid and what she sold it for. That could mean a $15,000 or $20,000 tax bill, all from one well-intended decision that went sideways. Not to mention, imagine if that gain was more like $500,000 instead of just $100,000. To avoid these taxes, you need to understand the IRS rules on what's called a step-up in basis. The step up in basis is a powerful rule in the tax code that says when your child or anyone other than your spouse inherits an asset like your home after you pass away, the IRS views them as if they paid the current market value for the property. This makes a massive difference than the alternative when it comes to how much taxes they will owe when they sell the property later on. But to understand how this works, we need to quickly explain what your basis is. Your basis, or cost basis, is a starting point for how the IRS determines how much taxes you owe when you sell an asset for a profit. An easy way to think about it is the amount you paid for the property plus any major improvements. So, back to our earlier example, you paid $400,000 for your home. That's your basis, or cost basis. If it's sold for $500,000, the difference, the $100,000, your profit when sold by your daughter, is her capital gain. That gain is the amount that she pays taxes on. If you give away the home to your children while you're alive, your child inherits your basis. But if they inherit the home after your death, the basis steps up to the current market value on the date that you passed away, meaning the potential for zero taxes. Hi, if you're enjoying this video, don't forget to hit that subscribe button. Thanks a lot. Let's take a look at an example using some bigger numbers. Say 20 years ago, you bought your home for $500,000, and today it's worth $1.5 million. That's a $1 million gain if it was sold today. If you give the home to your child while you're still living, your child inherits your $500,000 basis. When you pass away and they go to sell the property for, say, $1.5 million, they will owe taxes on the entire $1 million gain at a 20% federal capital gains taxes plus 3.8% Medicare tax plus state taxes, depending where you live. That could be $250,000 or more in taxes. But if your children inherit the house after you pass away, they will receive what's called the step up in basis. Meaning, when they inherit the home, their cost basis in the property becomes the current market value on the date you passed away, not what you paid for it. Let's say when that happens, the home is worth $1.5 million. Their basis, kind of like what they paid for it, becomes $1.5 million. So when they sell it for $1.5 million, instead of owing taxes on $1 million like they would have if they had inherited it while you were still living, their gain is $0. So their taxes are $0. And this is what it means to get a step up in basis when you're inheriting assets. And this is how most people want their children or anyone else to inherit their home. So, how do we make sure that this happens? First and foremost, don't add your child to the deed while you're still living unless explicitly counseled by an estate planning attorney. Some of you might be watching and know that there are ways to do this, but for general purposes, don't do this. Don't assume that it's easier to do it now and will be better later. What you should do instead is use a will or revocable living trust to pass the property after you die. This preserves the step up in basis. Understand, a will is nothing more than a piece of paper that says who gets what. A will does not allow you to control what happens with the property after you're gone, only who gets it. A trust gives you the opportunity for more control over the property once you're gone. I've got other videos talking about the differences between wills and trusts. But for now, what's most important to take away here is work with an estate planning attorney to set up the documents in a way that makes sense for your unique situation. Not all attorneys are estate planning attorneys, so find one that is. Use a will, a trust, get your estate plan. Now, you might be thinking, does this also apply to rental real estate or other assets? And the answer is yes, this does. And yes, it also applies to other assets like stocks and mutual funds. You might also be thinking, but I want to give some money away to them while I'm still living. I want to be able to see them enjoy some of the money that I give them. I don't want it to all go once I've passed away. And that's great. You still can. Give them cash or assets that have little to no gains. Gifting while you're still living is a fantastic thing to do. You just need to be savvy about which assets to give away while you're still living versus which assets for them to inherit later. Let's take a second to recap. Transferring your home the wrong way could cost your kids thousands in unnecessary taxes. Transferring it while you're still living, and they're going to inherit your basis. That means more taxes when they sell it later. Let them inherit the property after death, and they will receive what's called a full step up in basis. Final thoughts here. Talk to a tax advisor, talk to a financial planner, talk to an estate attorney. This is one of the most valuable planning moves you can make. Don't leave it to chance and don't go at it alone. If you're wondering how we can help, there's a link in the description below to schedule a free consultation. And if you enjoyed this video, don't forget to hit that subscribe button. Thanks again for joining us today, and we'll see you next time.